Ladies and gentlemen, the Singapore economy has a surprise super uplift in the month of October, and that really set all of us economists into a surprise. And this could mean very good news for Singaporeans and our jobs, the stock market moving forward. Let's watch and see what this good news is. In an interesting release of news, the government has just announced that our Singapore exports have grown by 22.2% in October. That is amazing, right? That is amazing. For a very small, mature economy like Singapore to have a 22.2% surge in exports, where exports is our lifeblood, that really caught us all by surprise. So let's watch on and see how did that happen. So Singapore export surprise, which is our non-oil domestic export, jumped by 22.2%, is largely driven by quite a few very interesting items. In short, the consensus forecast by economists and analysts was about 7.5%, which is already a very strong growth. But what turns out to be a surprise was a three times expectation, which causes it to grow by 22%, right? It's largely driven by three things. Number one, okay, non-monetary gold, which I'll talk about in detail later. There's an electronic boom, and there's a pharmaceutical growth as well. Position Singapore now well ahead of recession forecast that we had earlier this year. Interestingly, Singapore exports ranking globally is ranked very high. Despite our very tiny country, our goods export is ranked about 14 to 16 position globally. Now, given that we are not really a big manufacturing hub, that's quite a big news. But our service export is about 8 position in the world. Combined both together, we are ranked top 10. Given our country is one of the smallest country in the world, and yet we punch above our weight to have a goods and service export top 10 in the world, that's really an economic powerhouse. And that's why many countries, including US, Europe, Japan, they all look at us with some level of respect. Now, what drove the 22.2% increase in non-oil domestic export is 176% of non-monetary gold. Now, Singapore surprisingly has a lot of gold. We export a lot of gold, and that's a new news to me also. But let's take a look later what this gold is. Electronics went up by 33%. Specialized equipment went up by 16%, and 25% is the pharmaceutical growth. And I think this is a very, very strong growth, and that's very good news. Now, we are riding on certain waves throughout the world. And of course, one of them is artificial intelligence. In terms of AI-driven boom globally, Singapore is riding on this boom as well. So our country's integrated circuits exports and personal computers, this media and so on, storage, and all these things are driving a powerful surge in electronics growth. So we are very grateful. We are very blessed that we are riding on the AI wave, given that we don't have much AI, not don't have much AI software that we developed so far. Now, a quick word on gold. Now, Singapore has a hell lot of gold exports. In fact, it grows so much that our non-monetary gold exports exploded 176%. Well, I didn't know that as well, but Singapore is a big refinery hub. Okay, big refinery hub that we refine to 99.99% purity. This is 24K gold. And this is quite interesting to have this kind of gold. These are not gold that's used for central bank. I think these are largely gold that used for jewelry and commercial use. And for the last few months, gold prices were shooting up like crazy. Everybody were rushing to buy. I know that because my customers also bought a lot of gold from our gold live stream and things like that. And guess what? The whole business just took off for the whole country as well. Where did our gold export go? Wow, a lot of them go into Hong Kong, and from Hong Kong go into China. When I was in China, in their wholesale market in Shenzhen for gold, huge buildings, right? Like almost like a whole stretch of Shenton Way. Every one of them is selling gold. I found that wait a minute, their gold prices is more. Their wholesale gold prices is more expensive than the gold that I can sell in Singapore. All right, I didn't know their gold prices is so high, but now I understand because we export to them. And of course, India as well, Thailand, Taiwan, okay, and so on. We export a lot of all these gold to all these countries, and surprisingly, this really lift up our entire economy. We are really part of a ecosystem in a gold chain, and we have several gold refineries in Singapore. I wouldn't name them all; they're all here. And we also have a huge capacity for gold. It's about 2,000 to 2,500 tons per year of gold. 1 gram of gold is already about $190. Okay, and right now we are talking about a huge megaton. Can you imagine how much money that is? So it's equal to about 25 to 30% of global mine output. Now, we also have something interesting is that when we have investment grade gold, we don't charge GST. Okay. And of course, there's a lot of trust in our country's rule of law and price stability. People trust that the Singapore manufactured gold is really gold, right? Not mixed with some rubbish. When we say it's 24K, 9.99 gold is really 99.99, right? So it's really important that we Singapore live on a anchor of trust and reputation. Now, on top of gold and other things, we need to really drum into this thing called AI. Our country is riding on the AI wave, okay? And I think this is really very important. Now, our domestic retail, to be frank, usually is not doing well. But because we are releasing a lot of CDC voucher and SG60 voucher, that drove quite a lot of spending as well. Of course, one could say that what happens when this voucher dries up? No, the answer is I don't know. Okay, our retail business, especially those physical shop one, really need the CDC voucher. And fortunately, our service sector, especially the financial sector, is really super outperforming expectation. And manufacturing is driven by electronics, pharmaceutical, and non-gold. So now, however, I need to say this: the growth in Singapore is uneven. Some sectors are doing well, some sectors are not. It really depends on yourself. But generally, when the whole country do well, even those that are not doing well will generally get a drag on. Now, OCBC research analysts flag out some risks about this good news is right now the US tariff is still uncertain and there could be potential trade policy changes. But I noticed that Trump nowadays chicken out big time, right? The minute he sensed that there is an inflationary pressure, he quickly lower tariffs. He's very flexible in his negotiation. He likes Prime Minister Anwar. He lowers Malaysian tariff, right? He talks to anybody, and suddenly felt that these countries are not cooperating him. He increased the tariff to 400%. So he's very flexible with his tariff. And we still also don't know what is the Federal Reserve interest rate trajectory. Everybody's hoping at December there'll be one more rate cut. I don't know about that. And AI, one day is up, one day is down, one day is up, one day is down. When it's up, wow, AI is going to change the world. Down is AI is not paying us well. Up is, wow, AI new things are coming out. Down is, wow, why is AI so expensive? I'm just saying that these are volatility in perception. I think directionally AI is still a powerful engine of growth for the whole world and whole economy. But I think we should expect a hell of volatility in between. China, which is one of our major export countries, still register a lot of weakness in their domestic demand, and they really haven't come out of their problems yet, right? So I think that 2026, the overall numbers, okay, for the early part of the year, it wasn't that good. Now is good. So blended, I think a growth of 1 to 3% GDP, I think it's possible. Okay, maybe on the higher side of the range. So I think we should look at it a balanced view of both the upside and the downside. So I just want to say this. This is a case where I can see structural changes that are happening globally that we are benefiting from it. So that let's hope that this will be sustained and this is not just a one-off luck. I do think that Singapore stand to gain from a lot of all this, and we should continue to keep up with it. I think there are positive flow over to the Singapore economy and the stock market, okay, in the Singapore SGX as well. So I think those people who hold on to Singapore stocks, generally some good news there if the counters are heavily bet on Singapore. But I think that I'll be having this phrase called cautiously optimistic, right? Because things are not so rosy. We do have a lot of problems, but amidst all these problems, things are going up. So I think that we should watch and see. But I think that Singapore, for the rest of the year, which is only 1.5 months left, I think we are on a good footing. Okay, as long as there's no more shock, I think we should close this year pretty well. And congratulations to all in the right sectors. And let's see whether how will this translate to us throughout the end of the year. And for the rest of people who are looking at the US stock market, let's see what the US stock market will be today. And if I can, I'll catch everybody in the live stream. Thank you and goodbye.